Good day to everyone. Thank you for coming into this room. And today we are going to talk about weekly outlook for this week. Okay, so what now we are trying to do is, of course, we have been in the industry for more than uh, 30 years. In fact, it's going to be 30 years next year. And our system is very unique. And of course, we are using the system and now we are trying to provide services to the public so that at the same time we are also want to learn as a group. At the same time we want to recruit traders for our in-house trading. Okay, you need to of course understand our system, how our system works, then we can work together and continue. Okay, do take note of the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicated for future returns. The content on this webinar is mainly educational purpose, and use your information entirely at your own risk. And you must assess the risk uh, before you put in your trade. Okay, what we are going to do tonight is we are going to share with you. That means what to look forward for the whole week. Okay, that means what are the data that is going to be out, and how can we uh, utilize this information so that we can grab the opportunities uh, without missing any opportunities. So what I'm going to do now is, okay, I'm going to tell you, okay, because we also publish this report on the weekly in our website. You can always refer back and look back and look into this. So, and also we would also be updating in the event, because sometimes what happens is the market may change because due to unforeseen circumstances or some data that is going to affect the market. So on that note, we also publish everyday's report. So you can always look into everyday's report together with this weekly. Should give you a very comfort in trading. And of course, we also generate signals. So that is also another services which you can look forward to, so that you can trade with ease and with proper guidance and proper plan. Okay, now weekly this week. Okay, this is going to be a very important week this week because there's some important data that is going to come in, and it is going to affect the market a lot. Okay, it's depending on the data that is going to be out. Okay, today, okay, my apologies for this. I think there is a typo error here. Okay, the date is wrong. Okay, I think I just noticed this. Okay, I think I'll make the changes tomorrow. Okay, this is supposed to be 12th of August. Okay, which is today, and this is 13, 14, 15, 16. Okay, this is a typo error. Okay, my apologies for this. Okay, today there is no data, so we are not expecting any big movement tonight unless the market moves out of the critical low and critical high, meaning uh, before, below or above the previous high and low. So tomorrow, Tuesday, okay, we have an Australian wage price index, and we have pound claimant count change, and we have PPI. Okay, this is a very important data that is going to have big move in the market. And if the data is bad, we can expect big moves. So get yourself and fasten your seatbelt tomorrow, because there might be a big movement tomorrow. Then again, Wednesday, we have interest rate decisions. This is going to be affecting the New Zealand dollar. Okay, New Zealand dollar and Aussie dollar, and to a certain extent, dollar CAD, because all these are commodity currencies, and this would all move similarly in the direction. But of course, the major impact would be on the New Zealand, but Aussie and Canadian dollars would follow. And we also have pound CPI, and we have a crude oil inventories, and the most important data is the CPI. So tomorrow and the day after tomorrow, okay, we have the PPI and CPI. Okay, this is going to impact how the interest rate decision is going to be on the next US coming forth on September. So there is a chance that if the data is really weak, then the US may even decrease by more than 1/4%, meaning maybe they can even go down to 0.5%, because it may signal recession. So that part, we have to be a bit careful and stay focused on this. And Thursday, we have Australian employment change and unemployment rate. And we have pound GDP, US retail sales, and Philly Fed manufacturing index and unemployment claims. And Friday, again, we have Japanese GDP, then Australian governor speaks. Then we have pound retail sales, and we have US building permits and prelim consumer sentiment. Okay, caution. We have mentioned that CPI, PPI is out. Expect big movements and volatile session on the USD, especially if the data is weak. So we are already giving you an alert. So, and also, I think the market is expecting to be weak. So we have some indication that some of the markets has already started moving. So of course, I'm going to share with you which are the markets that's already started moving. So we got to move on that direction. Okay, now euro dollar. Okay, euro dollar closed at 10915. It closed at resistance left zone 1, open, and made a higher low and higher high, but closed near the open. So that means last week it opened and it made a higher low and higher high. So basically what we are trying to tell is euro dollar is in the uptrend based on last week movement. And this is trading within previous week range, which is 10880 and 11010, and has taken support at 10880 and 10830. So that means what we are saying is, as long as the price doesn't break 10880 and 10830, the price should move up, and we are selling that the price, the 10980 and 11010, has to break for further strength. Otherwise, it will be in a range between 10880 and 11010. So what we are trying to tell, or what we are expecting is, so this week, euro dollar, we are expecting the low max should be around this level, 10880, 130. And if this level breaks, then we expect the price to move higher. Okay, euro dollar is flat against lower time frame, but with an upside bias. Okay, basically what it's telling you is, even though the market is flat now, an upside bias, meaning the market is expected to push higher, okay, move higher on the daily and weekly while above these levels. Then bullish on the monthly, but need to clear 10980 and 11010. Euro dollar is getting ready to make or break scenario. If 965, 11010 breaks, we may see a pattern breakout towards 11045, 1140, and even 11280. And this level must hold. Okay, euro is strong against the yen and the Swiss, weak against Aussie, CAT, New Zealand, and mixed against others. So basically, we are telling majority, of course, the euro dollar is a bit strong on two currencies and weak against three currencies and mixed against two or the rest, meaning it's mixed against the pound and dollar sing. Okay, this is a final call, which is the euro dollar is in a congestion on the daily and the hourly with an upside bias. Weekly boundary with a low of this and the high of this must break to see the price target is. Okay, always please focus on this last sentence. Okay, basically this is the major clue what we are telling you. That means we are telling you how far the maximum you can see, how far you can see for the week, and at the same time we also tell you how is the market trading. So that means when we say it's congestion on the daily, okay, congestion on the daily, that means what is telling you is this is in a range on the daily range. Okay, this is what we are giving you. So that means the price is expected to trade within this level, and we are expecting the breakout higher towards this level, and this is the condition, and this is our view for euro. Okay, now what I can tell you is, okay, this is we give you our analysis, okay, and together with the chart, I would also tally it with you, so that this is going to be a weekly outlook, so that you can play the game. You see, I'm sure you all have been looking at the charts many years, and you all are just used to look at the charts. But of course, chart is a king. I mean, I'm not saying, you don't look at the chart, but what we are trying to tell you is, you look at the system, get that information, then finally you look into the chart, so that you will eliminate all those emotions. Okay, basically of the emotions of putting in a trade and doing it. So now, if I look at the chart, okay, this is the chart, and if you see, this is a 6-hour chart, and basically the market is making higher highs, higher lows, but still it's not a clear breakout. So by looking at this chart, again, what we feel, okay, personally, what we feel is, okay, we may get, right now this is in a congestion on the 360, so we may get a pullback, and this pullback should be limited. Should be limited. I think on the system, on our report, we said should be limited to a max of 108.80 or even 108.50. Okay, max maybe we can see 108.30. So by looking at the chart, okay, I confirm. Okay, I confirm. That means if I'm looking at upside breakout, I should not see the price going below 108.30, and I should see the price coming off a bit, then turn, then move up and break this high. Okay, the condition, of course, this break can or may happen tomorrow or the day after tomorrow, because it depends on the CPI and the PPI data. Looking at this market and looking at this chart, okay, what we feel is there is a chance that the data is going to be weak, and there is a high chance that we may see the break happening. But of course, if the data is strong, then we may get the other way around. But this is our view as of now for the week. Then you can get yourself prepared to put in your trade along uh, this way. Okay, the next instrument we are going to look at is pound. Okay, pound closed at 127.60. It closed at resistance left 4. Okay, opened and near made a lower low and lower high. Okay, that means this is pound is weaker than the euro dollar, but closed below the open and above the previous low. So that means what we are trying to tell you is the price went to a low. That means it broke previous week low and it closed above the low. So that means there is a failure. Okay, there is a failure on the previous week. So chances are we may have seen the low. So that is what we are telling you in one sentence. This is what has happened. And right now this is trading within previous week range between 126.65 and 128.15, and has taken support at 127.05 and 126.65. So when we say we have taken there's taken support, that means we should not be see the price going below these levels, or closing below this level. So these are the two conditions we need to stay focused. And of course, if we are going for a buy, then this would be the level to get ourselves focused to go for a buy. But has to clear 127.80, 128.15, 128.70 for further strength. Otherwise, it's going to be in a range between 127.05 and 128.15 or 128.70. Pound is flat against lower time frame. That means the hourly is telling, this is flat. but with an upside bias on the daily and weekly while above this. So that means the daily and weekly time frame are supporting the bulls. So we have to stay on the bullish side. So this is bullish on the monthly, but need to clear 12820 and 12870. So plus minus 5 pips. So what we are looking forward is if it breaks 12820, 12870, then we see the price moving higher. And pound is getting ready for the make or break scenario on the hourly. So that means what we are trying to say is the hourly is trying to turn up. That means it's trying to move up on the hourly. If 12780 and 12815 breaks, we may see the hourly turning up towards these levels. These are the targets: 12870, 12940, and 13040. And this must hold. So if you notice, we keep emphasizing, we keep emphasizing the levels. So we just say that, okay, you got to stay focused on those levels. And our system is, we call it a price level trading. Basically we trade on the levels, we trade on the price level principle. Okay, meaning, we will slowly, we will tell you, what are the key levels which we look for to use as a benchmark. Okay, then pound is strong against the yen, and the Swiss weak against the Aussie, CAD, and New Zealand, and mixed against others. So that means this is also similar to the euro dollar. And pound is in a congestion on the daily. Okay, this is the most important sentence you need to know if you are trading on the pound. This is on the congestion on the daily and the hourly with an upside bias within these levels. That means, 12705, 12665 must hold, and 12780 must break. So the weekly boundary with the low of these two levels and the high, this must break to see a price target of this. In fact, we have mentioned here, we are emphasizing again. So we got to get yourself prepared that, okay, we are expecting a move on the high side for the pound. Okay, let me double confirm with the chart. Okay, so now if you look at pound, this is a daily chart. This is a very simple daily chart, and the market has come down on a correction down, and this is the 12615 is a critical level, and 12705 is also a critical level. So in fact, the market closed below that level, then it's been holding and started to turn. So if you look at the 360, looks like, okay, we may have seen the bottom. Okay, we may have seen the bottom because we see a divergence here. Okay, there is a very high chance that this market is in a congestion. So if we get some pullback, it should be limited to 12705 and remember 12665. So these are the two levels we need to take note. So if we see a chance, by any chance, if you see that level, go for a buy. Then you wait to see the price break that 12780. Then we see the price moving higher. So that again, this is a similar situation. We are looking, that means, that the PPI and the CPI should be, the data should be weak. They should be weak. So that is what, if the market is weak, and of course I think we would be, I'm not sure when is the next session. I think most likely should be Wednesday, which is a CPI data. During that, I think we'll be doing a news trading. So if you can come, then definitely it would be worthwhile, and we can trade during the news. Okay, the next tool the next instrument we are looking at is the dollar yen. Dollar yen closed at 146.65. It closed at resistance left 12. That means, the market has been a pretty big up move. Open, it made a lower low, lower high, but closed near the open and above the previous low. So this one sentence would tell you that, okay, this is how the market has traded last week. So that means it has made a lower low, and there was a failure. Then the market started to move near the open. So this is right now, this is trading within the previous week range between 141.80 and 147.85, and has taken support at 146.05 and 145.10. So in other words, any pullback, we are expecting these two levels to hold, but has to clear 147.85, 148.40 for further strength. Otherwise, this is going to be within the range between 46.05, 45.10, or even the 47.85 might hold. Okay, dollar yen, this is flat against the lower time frame with an upside bias on the daily and hourly, while above these levels, bullish on the weekly, but need to clear 47.5, 47.85, and 48.40. So in other words, these levels may hold if the data is weak, but if it really breaks, this is where the confusion is, because the dollar is showing weakness on the euro dollar and the pound, but is showing strength on the dollar yen. But that again, you must understand that this is all there is a decoupling right now, which is all individually moving on their own movement. So we got to be a bit careful on this. So dollar yen is getting ready for the make or break scenario on the hourly, and if this breaks, we may see hourly turning up towards 50, 25, and 51 half. And this level must hold. This is weak against all the crosses on the hourly. Okay, this is the most important. Dollar yen is in a congestion on the daily and hourly with an upside bias within this level. That means as long as that 145.50 holds, this is expected to move higher. So we are looking at a weekly boundary with a low of 45.50 and 44.30, and the high must break to see a price target of 150.25 or even 151.50. Okay, now let me share the chart. Okay, now we look at dollar yen. Okay, the dollar yen right now, okay, what is telling us, the chart is telling us is, okay, we are getting a pullback. Okay, this was in a big downtrend on the daily. So now we are seeing a correction up on the 6 hour, and we may get, okay, what we are looking for is, maximum. We should see the price moving towards 149.75 or 151 level. Then the market should come down. Okay, that again, this should only happen if the 49.75 breaks. So overall, we are cautiously bullish. Okay, I would say cautiously bullish. That means, we may expect the price to move slightly above, but eventually it should turn down. So if the data, again, if the data is bad, okay, what is going to happen is, if the data is good, then dollar yen should be in the limelight, and we should see a range on the euro dollar and the pound. Okay, but on the other hand, if the data is bad, okay, what we should be getting is, we should be getting a weakness on the euro dollar and the pound, and we should be getting a range trading on the dollar yen. Okay, so this is how you play the game. So that means, you see, two different is giving you a two different picture, and is giving you a two different scenarios. So it all depends on how the PPI and the CPI is going to come. Okay, so I'm getting yourself prepared, getting your prepared but overall is we don't see the price moving beyond maybe it should start to move up, then it should come down. Okay, this is what we are expecting. Okay, and that again depends uh, on the data that is going to come out tomorrow and Wednesday. Okay, so now the next uh, instrument we are looking at is dollar Swiss. Okay, dollar Swiss closed at 86.55, and which it closed at RL9. Okay, this is resistance left 9, and this has made a lower low, lower high, but closed above the open and above the previous low. So that means if you compare dollar yen and dollar Swiss looks more weaker. Okay, this one sentence would give you a clue. See, dollar yen closed near the open, and this one closed above the open. So that means dollar Swiss is the weakest currency last week. Okay, and this is trading within previous week range between 84.30 and 86.75, and it has taken support at 86.10 and 85.50. And take note that it has to clear 86.75, 87.20 for further strength. Otherwise, this is going to be in a range between 85.50 and 87.20. So the dollar Swiss, this is flat on the lower time frame with an upside bias on the daily and hourly. That means the hourly and daily are telling us that there is more strength to be seen, while above 85.60 and 85.10, right? So this is bullish on the weekly, need to clear 86.75 and 87.20. So dollar Swiss is getting ready for a make or break scenario on the hourly, and if 86.75, 87.20 breaks, we may see the hourly turning up towards 87.70, 88.70. And the condition is 85.50 and 85.10 must hold. Swiss is weak against all the crosses against on the hourly. And this is the most important. Dollar Swiss is in a congestion on the daily and hourly with an upside bias. So that means the downside, the 85.60 must hold, 87.75 might break, and we are giving you the weekly boundary. That means the low we should not see beyond 85.70 and 85.10, and the high should break to see a price target of this. So we are bullish on the dollar Swiss. Okay, let me again double confirm on the chart, and we publish this on the weekly, then daily we have a daily view as well. So we would be updating based on the market movement. Okay, so now if you look at dollar Swiss, in fact this is showing more weakness than dollar yen. So chances are, we may see the market spiking up one more move, then it should come down. Okay, we don't see the price going beyond 87.70 and 88.25 or 88.70. Okay, the system and the chart do agree. So there is a very high probability that we may see the price moving up, then eventually should come down. Okay, again, the condition is if the data is good, we may see the price moving up, then eventually coming down. If the data is bad, we may see in a range, then it should be coming down. We may not see the spike up. So this again, it depends on the data that we are going to see tomorrow and the day after tomorrow. So the data is going to be a key impact on these two currencies. Okay, the next currency we are going to talk is Aussie dollar. The Aussie dollar closed at 65.70, which has closed at RL10. And it opened and made a lower low and lower high, but closed above the open and above the previous low. So that means this is directly opposite to dollar Swiss. So that means, the market went, it made a low. That means it broke the previous week low. Then it closed above the open. So, and this is trading within previous week, which is 63.5 and 66.05, and has taken support at 65.30 and 64.70, and but has to clear 66.05, 66.45 for further strength. Otherwise, this is going to be in a range within this level. Aussie dollar is flat against it's flats on the lower time frame with an upside bias on the daily and hourly, while above 65, 65, and 65. That means as long as the price is trading above 65, 65, and 65.05, we are expecting the price to move higher, right? So the next is Aussie is getting ready for the make or break scenario on the hourly and daily. And if this level breaks, we may see daily turn up towards 67.10, 67.70, or even 68 levels. And this must hold. And Aussie is strong against all the crosses on the hourly and daily. Okay, Aussie is in the congestion on the daily and hourly. This is the most important sentence we need to focus. This is with an upside bias as long as the price is trading above 65.05. And we are getting a weekly boundary with a low of 65.45 or even 65.05. And the high must break to see a price target of 67.05, 67.70, and 68. So overall, we are bullish on Aussie dollar this week. And the answer has to be depending on tomorrow's data and the PPI data. So if the data is weak, then we may see as we expected. That means the price would move higher, then eventually come down. But if the data is strong, let's say the data it comes out to be good, then this is going to be in a range, then eventually break up. So this is how the play is going to be for the week. So it all depends on tomorrow and Wednesday's data. So looking at this Aussie, okay, we have seen a major low confirmed. Okay, confirmed on the daily is yet to confirm. Of course, the confirmation would be if the market closes above 66.50, right? So if it closes below, then above this level, then price is expected to test this high, which was our projection towards 68, and this eventually should break. Right? Because we have seen a low confirmed on the daily and the 6-hour chart. So the chart and the system agrees, so we can play the game the same way as what our report are suggesting. Okay, the next instrument we are going to look for is dollar CAD. Okay, dollar CAD closed at 37.30. Okay, closed at RL10, opened, and this made a lower low and higher high, but closed below the open. Okay, that means the market went up, then eventually came down and closed below the open and below the previous low. So this is telling you that okay, the Canadian dollar is strong against the dollar, and this is trading within the previous week range, which is 137.20 and 39.5. Okay, and has taken resistance at 137.85 and 138.65. So in other words, we should not see the price going above this level for this week, and we should see the price moving lower, and we should see the price breaking 36.80 for further weakness, or otherwise if you don't see the breakness, then it is going to be within the range between 37.20 and 37.80 and 38.30. So in other words, we may see the price breaking lower. This is again depends on tomorrow and the day after data. Okay, Then we see the dollar cat. This is flat on the lower time frame with the downside bias on the daily and hourly while below this level. So that means we should not see this level breaking at any time. And we are bearish on the weekly, but need to clear 37.20 and 36.75 for further weakness. So US cat is getting ready for the make or break scenario on the hourly and daily. And this 37.20 and 36.80 breaks, we may see daily turning down towards 36.65, 36.30 and 35.80 levels, and 37.80 and 38.25 must hold. And this is strong against all the crosses on the hourly and daily. The most important, dollar cat is in the congestion on the daily and hourly with a downside bias. That means right now the market is in a congestion. That means it's trading in a range, but it's expected to break lower, okay, with a downside bias. And the weekly boundary we are expecting is the high. We are not expecting beyond 37.80 and 38.30. Excuse me. And the low should break to see a price target of 36.65, 36.45, 36.05, or even 35.80. Okay, going back to the chart. Okay, dollar cat. We look at the daily. The market has made a failure. So this is a failure, we call it a failure, to hold above the resistance level. So right now the market has already turned down, and this is expected to push lower towards 35.80. So which is the chart is also giving us the same answer. So on the other hand, we should not see the price going above 37. Remember, we said 37.80 and 38.30. So that means we are not expecting the price to break. So now what is going to happen is tomorrow's data is a key event. So if tomorrow's data is going to be weak, we expect the break lower to happen and continue lower. But on the other hand, if let's say tomorrow the data come out to be strong, then we may see the price moving up, then eventually coming down. So this is what is going to happen, and we are already mentally getting yourself prepared how to get yourself prepared and how you should be trading this instrument. So right now this is in a congestion. Market is expected to move up, come down, or it's going to be in a range and come down depending on the data. So overall is we are still bearish. We are bearish, okay, because the market has failed on the top, broke the support, now is moving lower, right? So this is also, I agree with the report, and I want to stick to the plan, to the report, and we go according to the plan. Okay, the next instrument we are going to talk is the New Zealand dollar. Okay, the New Zealand dollar closed at 60. Okay, this closed at RL8 and opened, and this is made lower low, higher high, and closed above the open. So that means this market was very strong last week. So that means the market broke the previous week low and made a higher high. That means it broke previous week high and closed above the open. So that means this market was the strongest cross last week and above the previous high. Okay, and it also closed above the previous high. And this is trading within the previous week of 58.50 and 60.35, and has taken support at 59.65 and 58.85, and has to clear 60.35 and 60.70 for further strength. Otherwise, this is going to be in a range between 59.65 and 60.35 or 60.70. So this New Zealand dollar is flat on the lower time frame with an upside bias on the daily and hourly. while above 59.65 and 59. That means as long as the price is not breaking these levels, we are still bullish. No, that means we still want to go for a buy, and that's what we meant by that. Bullish on the weekly, need to clear 60.35, 60.70. Okay, now New Zealand is getting ready for the make or break scenario on the hourly and daily. And this is if 60.35.70 breaks, then we may see the daily turning up towards 61.25 and 61.5, and this must hold. New Zealand is strong against all the crosses on the hourly and daily. Okay, this is a caution. Okay, we have to take note. The New Zealand interest rate announcement. This is happening on uh, New Zealand interest rate. Okay, this is on Wednesday. Okay, Wednesday morning. So what we are saying is, okay, of course, they are expected not to cut rate. So if no surprises are seen, we expect the New Zealand dollar to continue its strength towards, right? But again, I repeat, if there is a surprising, meaning if they decide to cut, then chances are this might be in the limelight and this might be a failure and we may see a big fall. So this is the best way to trade is we would be trading a news trading during this announcement. If you can just follow, then of course you can come in and we can trade during this. So that on that, during that time, we will tell you what to do and how we can go about. New Zealand dollar is in a congestion on the daily and hourly with an upside bias as long as it doesn't break that 59.35, and we are seeing a weekly boundary with the low of 59.65, 59.35, and the high has to break. If it breaks, then we may see the price moving towards 61.25, 61.50, 61.80, or even 62 level. So that means New Zealand becomes a bit tricky. Okay, what we are expecting is we should see the New Zealand dollar not cutting the interest rate. That's by Wednesday, and the the CPI and the PPI also should come in weak. So we are giving you a very clear direction and clear expectations. That means what is to be looked forward and how we can trade during this and how we can move in the event if the data is weak or strong. So looking at the chart, this again, we have seen a low on the hourly and we have seen a low confirm on the daily, and this pattern all is very unique. In fact, usually, this is all you see. Usually the low should happen somewhere in the here, somewhere, but this patterns all looks very unique. We have, I mean, I've now not come across this kind of pattern uh, uh, in the near, somewhere in the near time, because now I think things are getting more and more complex. So we have seen a hammer here. For those people who are looking at candlesticks, you should know what I'm talking about. So low is confirmed on the daily. Price is expected to move towards the high, and you should be expecting to test this resistance. And if it breaks, then we should see. And I agree with the report, and we are still in favor of the report. And remember, we said that we should not see the price breaking 59.35, which is also true, and we agree with the report, and we still want to stick to the report and trade as what the report is suggesting. Okay, the next instrument we are looking at is the dollar sing. Okay, the dollar sing is closed at 32.40. It closed at RL2 and opened near that level. And this is made a lower low, lower high, but closed below the open and below the previous low. So that means the dollar sing shows that there is a weakness on the sing. That means the sing dollar is a bit strong compared to the dollar, and this is trading within previous week range, which is 31.85, 131.85 and 132.95, and it has taken support at 32.25 and 31.85. and it has to clear 32.95, 33.45 for further strength. Otherwise, it's going to be a bit, it's going to be in a range. So this is also a bit tricky. Okay, honestly, the dollar sing also, it's it's a bit mixed signals we are seeing on this based on the report. We are not neither seeing strength or neither weakness, but it's a bit mixed. Okay, this is flat against the in the lower time frame with the downside bias on the daily and hourly, while below 32.95 and 33.45. And again, we are seeing a mixed on the weekly. So we need to clear. So that means we are not sure whether the low is already been confirmed, or we may see the price moving lower, or we are going to see higher. So we are getting a mixed signal. So we are not very clear on this. So what we are trying to do is we are trying to uh, uh, read the market and convey what the market is telling you. So this is just like a giving you a weatherman giving you a weather forecast. So you can get yourself prepared and move accordingly. So the dollar thing is getting ready for the make or break scenario on the hourly. So that means if this breaks, we see the price turning up, and the condition we are seeing is towards 133.80 and 134.60. Okay, this is my apologies again. There's a typo error here. This is supposed to be 133.80 and 134.60, and the 132.25 and 131.85 must hold. And this is weak against the crosses yen on the hourly and daily. So it's a bit mixed signals we are getting on the dollar sing. Okay, and the dollar thing is it's in a congestion on the daily and hourly with the mixed bias. So we are not sure which way the break is going to happen. So if 32.95 breaks, then this is going to be the low. And if this breaks, then the low is yet to be seen. So that is the condition for dollar sing as of now. Okay. And this is a weekly boundary. We are seeing a low of 32.25 and 31.85. So that means we are trying to stay on the bullish side of the market. And that means we are betting that the low is seen, and we expect this high to break towards this. Okay, so of course we have to stick to one direction or one side of the market. We can't be saying like okay, either way, so we got to take a call, and we got to stick in one direction. So looking at the chart, okay, there is a chance, I mean there is a chance that this might be the low. And again, there is a chance that if this breaks, then we may see the price moving lower towards 30.20 or even 29.70. Okay, so again, we are seeing mixed signals. Okay, but on the report, okay, we are saying that we want to stay on the bullish side. Okay, but looking at the chart, we may change. I mean, I'm not saying, because I feel that this low is not confirmed. So now is 50-50 chance. Again, we look at the chart. Yeah, the 32.25, 32 should hold. So we are getting a mixed signal on this. So if I'm going to trade this, either I would try to trade on the levels mentioned. That means, like if I see 131.85, probably I may want to go for a cautious buy. But on the other hand, uh, if I see this level, then probably I may want to go for a cautious sell. But without that, I just want to make it as a range play, because I'm not very clear, and I'm not very confident on this cross. So the rest all are giving. In fact, the euro is giving us a clear signal. Pound is giving us a clear signal. Dollar yen and dollar Swiss are giving a bit mixed signal, because previous week it was moving. And of course, the Aussie dollar, New Zealand dollar, and dollar CAD are all in the same direction. So that again will depend on the New Zealand interest rate announcement. Okay, coming to the final instrument, which is the gold, okay, which is also one of our favorite and our focus. So for gold, spot gold closed at 2431 half. Okay, that means 2431 half, and this closed at RL12, and it opened around that RL12 level on the zone. This has made a lower low, lower high, but closed below the open, and this is trading within the previous week range, which is 2364 half and 2457 half, and has taken support at 2417 and 2402. So we feel that this report was published in the morning. We feel that it has to clear 2433 half and 38 half, which I believe it has already done for further strength. Otherwise, this is going to be in a range between 2417 and 2438 half. So overall, what we feel is, okay, again, this is not showing a big strength, but it has taken support at 2417 and 2402. So that means we are not expecting the price to move below these levels. So we are a bit bullish, and this 38 half has to clear, which I believe the market has break that level. Later, of course, I'll look at the chart, then I'll give you the view and further view and to see whether this supports the view. And spot gold is flat against the lower time frame with an upside bias on the daily and hourly, while above 2417 and 24. So it means the key level you should take note is the 2417 and 2402 must hold for the week. We should not see the price breaking these levels. And we are mixed on the weekly with an upside bias, but need to clear 2433 half and 2438 half. So these are the key levels to take note. Okay, spot gold is getting ready for the make or break scenario. If the 2433 half, 38 half breaks, we may see hourly has turned up towards 58 half, 75, 2475 half, or even 2483 half levels, and this must hold. Okay, this we are giving you a caution. US CPI, PPI is out. If the data disappoints, we may see a big move up. So we are giving you a clue that we are going to see a big move that is happening, that is going to happen on the gold. If these two data disappoints or one disappoints, we may see a spike up, then the next data come out good, then we may see a correction or the other way around, whatever. But we have to stay focused on the data. Okay, the most important is for gold is in a congestion on the daily and hourly with an upside bias within 2417 half and 2438 half until the break. And weekly boundary, we are expecting the low not beyond 1712 or 02, and the high should break to see a price target of 58 half and 7583 or even higher. That means we are expecting we may have seen the low and we may see the price breaking higher. Okay, so for those people who are trading on gold, okay, I would suggest fasten your seat belt, and tomorrow and the day after tomorrow are going to be very important, which uh, which if you see, if you look at this, okay, this is going to be a make or break scenario. Okay, this is what we call a make or break scenario. We are seeing the market we may have seen is still in a range, and still the correction may be over. So for confirmation, okay, like I can do a projection, okay, which is we are getting a projection of 2525 or yeah, 25252520, and we have enough strength to break that high. So the only thing we got to take note is the data. We are not sure whether the data is going to be good or bad, but looking at this chart, we believe that the data is going to be bad or the data is going to be a bit weak. And as of now, okay, in fact, today's low is uh, 24224. So as of now, we are going to see a range play. So that means this is the high for tonight. We don't see the price going beyond 44 or 45, and this is going to be a range play between 2435 or maybe 2424 should hold, and this is going to be a range play for tonight. And tomorrow is the important day. So you got to get yourself prepared. If the data is bad, we may get a very big move on the gold. But on the other hand, if the data is really good, then chances are we may get a stronger correction. But irrespective, whatever happens, I think the 2417, okay, just now I think our report said 2417 and 24 12 and 2402. All these are important levels. Okay, we don't see the price going beyond that levels. Even if the data is really good, but unless the sentiment change. So right now, if you look at this pattern, we are looking for a make or break scenario. If this level breaks, then we are going to see a big move happen. Otherwise, it is going to be back into the range again, right? So I think more or less, I think I've done with our weekly report. Okay, and let me see when is the next session. Okay, next, I think the next section we are going to have it on Wednesday. Okay, Wednesday around the same time. So that is going to be news trading, because this is going to be on CPI data out. So that might be a bit interesting, because we are going to trade during the announcement. So I expect if you can come, or you can bring in your friends, it will be good. Then I'll tell you how we can look, then probably whether we can look for a big move or big happening during that time, depending on the data announcement. Okay. So with that, I think I conclude today's session. Okay, thank you for joining us, and looking forward to see you again next week. So if you feel that if you want to just play back, you can just play back from the YouTube. For those people who are using YouTube, my apologies, you can't ask. But of course, today there isn't much asked, because we are just sharing the weekly report. So you just look into it, then we'll see. I'll look forward to see you again next week. Okay, till then, good luck, and see you again next week. Bye.